Stop scrolling right now because what I'm about to tell you could directly affect your pension payments in 2026. And if you ignore this warning today, you may wake up one morning to find that your Centrelink payment has been paused, reduced, or completely canceled without any prior notice. This is not something to take lightly. This is a real and serious situation that is already affecting thousands of ordinary Australians across the country right now. People just like you who worked hard their entire lives, contributed to this country, and now depend on their pension payments to cover everyday expenses like groceries, electricity bills, rent, and medical costs. If you are receiving the age pension, the disability support pension, the carer payment, or any other form of Centrelink benefit, then this video is made specifically for you, and you need to watch every single second of it because the information shared here could be the difference between keeping your full payment and losing a significant portion of it. Welcome back to Centrelink Pension Guide, the channel that is fully dedicated to helping everyday Australians understand their Centrelink entitlements, stay updated on the latest government changes, and protect the payments they have rightfully earned and deserve. We break down complicated government rules and legal language into plain, simple English so that you never feel confused or left in the dark about what is happening with your money. If you are new to this channel, we want to give you a very warm welcome and strongly encourage you to subscribe right now and press the bell notification icon so that every time we upload an important update like this one, you are the very first person to know about it. Because in 2026, staying informed is more important than ever before. Now let us get straight into why your Centrelink pension payments are genuinely at risk this year, and what you absolutely must do to protect yourself. In 2026, Services Australia, the government body responsible for managing all Centrelink payments, has significantly increased its data matching and compliance activities. And this means that the government is now more aggressively cross-referencing your personal financial information with data held by the Australian Taxation Office, major banks and financial institutions, the Department of Home Affairs, state and territory revenue offices, and several other government agencies. What this means in plain terms is that if there is even a small discrepancy or mismatch between what you have reported to Centrelink and what these outside agencies are showing in their records, Centrelink has the authority to flag your account for an investigation, send you a formal debt notice, reduce your payment rate, or in some cases, suspend your payments entirely while they conduct their review. And all of this can happen very quickly and with very little warning given to you beforehand. The sad and frustrating reality is that the vast majority of people who end up in this situation did not deliberately do anything wrong. They simply did not fully understand what information they were required to report, or their personal circumstances changed and they did not realize they needed to update Centrelink about it, or they received a review letter in the mail and set it aside thinking they would deal with it later and then forgot about it completely. Any of these innocent mistakes can lead to serious financial consequences, which is exactly why we at Centrelink Pension Guide are bringing you this urgent alert today. Let us now go through the most common reasons that Centrelink payments are being reduced or canceled in 2026 so that you can check your own situation against each one of these and make sure you are fully protected. The single biggest reason that pension payments are being cut is unreported income, and this catches more people off guard than almost anything else because many pensioners do not realize that all forms of income must be reported to Centrelink. This includes part-time or casual work income, income from renting out a room or a property, dividends from shares or managed funds, money received from overseas, and even one-off payments that you may have thought were insignificant. Centrelink uses your income information to calculate exactly how much pension you are entitled to receive, and if their data matching system picks up income that was not declared, they will treat it as an overpayment, and you will be required to pay that money back, sometimes going back several years. The second major reason is changes in assets that have not been reported. If you received an inheritance from a deceased family member, if you sold a property or a vehicle, if your superannuation balance increased significantly, or if you received any large lump sum payment of any kind, these changes in your asset position must be reported to Centrelink promptly because they directly affect how much pension you are eligible to receive under the assets test. In 2026, The full-age pension asset threshold for a single homeowner sits at approximately $314,000, excluding the value of your primary home, and for a couple, it is around $470,000. If your total assets exceed these figures, your pension payment will begin to reduce on a sliding scale, and if you have not updated Centrelink about an increase in your assets, you could be receiving more money than you are actually entitled to, which will eventually be recovered as a debt. The third reason is changes in relationship status. If you were previously assessed as a single person and you have since entered into a de facto relationship or remarried, Centrelink must be told because being in a couple affects both the income test and assets test thresholds, as well as the rate of payment you receive. And failing to disclose a relationship change is one of the most serious compliance issues Centrelink investigates. The fourth reason is changes in your living arrangements. If you have moved to a new address, if someone has come to live with you permanently, if you have entered an aged care facility, or if you have spent extended time living or traveling overseas beyond the permitted 6-week period, all of these circumstances can affect your payment rate and eligibility and must be communicated to Centrelink without delay. The fifth and perhaps most avoidable reason is simply not responding to Centrelink review notices. Every year, Centrelink conducts routine reviews of pension recipients to confirm that their recorded circumstances are still accurate. And in 2026, the volume of these review notices has increased considerably, meaning more people than ever are receiving these letters and emails, and unfortunately, many are ignoring them or missing the response deadline, which triggers an automatic suspension of payments. Beyond these general reasons, there are also several specific policy developments in 2026 that every pension recipient must be aware of. First, the government-imposed freeze on Centrelink deeming rates, which has been protecting pensioners from having their deemed investment income artificially inflated during the period of high interest rates, is now under review, and there are strong indications that deeming rates may be adjusted upward, which would increase your assessed income from savings and investments and could reduce your pension payment even if your actual bank balance has not changed at all. Second, Centrelink has rolled out enhanced digital identity verification systems in 2026, meaning that if your MyGov account details, identification documents, and bank account information are not all consistent and up to date, you may experience payment delays, account access issues, or trigger an automated compliance flag. So it is absolutely essential that you log into your MyGov account today and verify that every piece of information recorded there is accurate and current. Third, recipients of the disability support pension are facing a noticeably higher rate of medical reviews in 2026 as the government continues its focus on DSP compliance, meaning that if you are on the DSP, you should make sure your medical records are thorough and up to date and that your treating doctors are fully aware of how your condition affects your ability to work, because an inadequately documented medical review could put your DSP eligibility at risk. Fourth, the rules and payment amounts for rent assistance, which many pensioners receive as a supplement to their base pension, have been updated in 2026. So if you have recently moved or changed your rental arrangements, you need to make sure this is correctly recorded with Centrelink so you continue receiving the correct amount of assistance. So what should you do right now to make sure your payments are fully protected? First, log into your MyGov account today, not tomorrow, not next week, today, and carefully go through every section of your Centrelink record to confirm that your address, income, assets, relationship status, and living arrangements are all accurately reflected. Second, if you are on a payment that requires regular income reporting, make sure you are submitting your report on time every single reporting period, even if your income for that period is zero, because missing a report can trigger a payment hold. Third, build the habit of keeping organized records. Save your bank statements, keep copies of your tax returns, and document any significant financial transactions, because having clear evidence of your circumstances is your best protection if Centrelink ever questions your situation. Fourth, the moment you receive any letter, email, or notification from Centrelink, read it carefully and act on it immediately, because deadlines on review notices are firm and missing them can have immediate consequences for your payment. Fifth, take advantage of the free financial information service offered through Centrelink. These are trained officers who can sit down with you at no cost and help you understand exactly how your current financial situation affects your pension. And they can also help you plan ahead so that any future changes to your circumstances are handled correctly from the start. Your pension is not just a payment. It is your financial security, your independence, and something you have every right to receive without fear of unexpected disruptions. And that is exactly why Centrelink Pension Guide is here every single week to give you the clear, honest, and up-to-date information you need to stay protected. If this video has been helpful to you today, please take just 1 second to give it a thumbs up because it helps our video reach more Australians who urgently need this information. And if you know anyone, a parent, a sibling, a neighbor, or a friend who is currently receiving a Centrelink pension, please share this video with them right now because it could genuinely make a significant difference in their financial life. Do not forget to subscribe to Centrelink Pension Guide and press the bell notification button so you are always the first to receive our latest updates, alerts, and guides. Thank you so much for being part of our community. Please take good care of yourself, and we will see you again in the very next video.